they've taken probably about 350 million in capital total. A lot of that capital has come in the B and the C rounds and so on from VCs here in Silicon Valley. So bridging that funding gap is really the trick. But I would argue that there is no correlation between where you're from and whether you're likely to be a successful or unsuccessful entrepreneur. You know, in the sense that there's just as much probability that there'll be a great startup in Romania or Denmark or Norway or Israel or Turkey or wherever as there would be here. A good deal is always hard to find.
I'm going to disagree with that.
Great.
Control take a slightly different slant at it. So I agree, good ideas can come from anywhere, and so we believe that, and we don't, we look for them. It doesn't matter where the idea comes from or where the entrepreneur comes from. But then depending on the business, if I want to oversimplify, if you're in Europe, and I'm really oversimplifying, there are two sorts of businesses. There's a category of I would say pan-European opportunities, and there are more global opportunities. If you're in the global opportunity category, you have a much higher hurdle for success being in Europe and being European than if you were here. Your idea may be just as good, but your ability as an entrepreneur to make it succeed in the US, because eventually you have to come here, and you have to come here sooner rather than later, is much lower, right? And particularly, so you need to be educated a lot more, and you need to be much more humble, and that's where the friction happens, because as Richard said, like if you're a European entrepreneur, you're probably a tougher entrepreneur than the American entrepreneur because it's less of a norm. But that means your ego and your dedication to your project and your eagerness to drive it all the way is even higher, and therefore your ability to adapt to a different environment and include other people's, in your capital, in your influence matrix, include a board and work with the board the American way and lose majority control, et cetera, is a lot harder. So I find that we're spending on all our European deals, we're spending at least half of the time of our time as investors in educating, in managing cultural, emotional, psychological issues. Have nothing to do with business, but that are the biggest factor of failure or success of those businesses.
Let me ask, just sort of listening to the differences between the two of you, how much does the existence of the ecosystem that exists here or does not necessarily exist elsewhere have in either of the positions that you're taking?
It depends what the business is. I mean, I would argue the reason for the statement, we've backed a number of semiconductor companies. For those that have reached a point of maturity, with only one exception, they are the dominant players in their segments. Picachip in the UK is the dominant provider of small cell technology for cell phones. Microcosm Communications dominated the PMD IC market. Nanotech Semiconductor now dominates the PMD segment, et cetera, et cetera. One after the other, these companies that didn't start here in Silicon Valley became the #1 player. And interestingly enough, if you look at Picachip, for example, they were trying to do something where probably $1 billion in venture capital had been poured into startups right here in Silicon Valley, like Chameleon, Box, Morphix, Equator, et cetera, et cetera, et cetera, all failures, all pretty much zeros or poor cash out exits, and they have succeeded. So it can be done, but I think what it says actually, and maybe to clarify what I said before, every time you find a really successful entrepreneur, from speaking as a VC, they are an exceptional individual. Whether it's here in Silicon Valley or who knows where, it doesn't matter. They're an exceptional individual. And so I would argue that an exceptional individual and an exceptional team doesn't necessarily need an ecosystem to be successful. It makes things easier, but then one could argue maybe it also tolerates mediocrity as a result.
Don, I'll let you leap in here.
Okay, yeah. I'm not exactly sure of the question we're answering anymore, but
Go right ahead and answer whatever
that
you
won't
want.
stop me. I guess the observation I would make is, it's useful to look at history and look back at the last 10, 20 years to answer where the best places to start a company is. But I think it's going to change, and it's changing right now. It's definitely been the case that if you had a wonderful idea and you were a foreign-born founder, you could come to Silicon Valley, whether it was Jerry Yang and Yahoo or or Google or eBay, all with foreign-born founders. They found Silicon Valley the easiest place to start a company. I think that is changing. I think now and by the way, all those people were in their 20s, and so you need to have a culture and an environment that embraces youth starting a company. You need to have venture capitalists that will embrace youth. In fact, every successful company in the last 20 years was started by a 20-year-old. I mean, if you look at the mega hit companies, it's true. I mean, go down the list. It's whether it's Apple, Microsoft. Well, the only exception are those started by teenagers. Dell Computer and Microsoft, but the others were started by 20-year-olds. So you need to have venture capitalists who are willing to fund young people who don't have any fear and really don't have a whole lot of experience. And because of that, they don't have much to lose, and it doesn't matter if they have to eat peanut butter for a year. They're willing to do that. So there are some cultures where that's difficult. Japan, for example, it's not okay to fail, and it's a culture that recognizes and values seniority, and so that's a hard environment. But I think the world, with the internet, the information flow, people have seen what's worked in Silicon Valley, so it's now possible to reproduce that anywhere, whether you're in Shanghai or Moscow. And so I think going forward, you can start a great company anywhere. You do need an ecosystem of venture capitalists. You can't just have one or two venture capitalists. You need to have, ideally a dozen. Because you have to do multiple rounds. If your idea is a good one, it's probably going to be controversial, and it probably means that most venture capitalists won't understand it and won't back you. So you've got to have a large enough pool that you can find the one or two who are willing to believe in you. So I guess I'm a believer that in the next decade we will see a much higher percentage of exits and big successes and new enterprises created outside of the United States, outside of Silicon Valley. You mentioned earlier that IPOs in China, I don't know what the number was last year, something like 75 venture-backed IPOs in China last year. And the year before that, there were 45. So, it's happening. Now, it's true, maybe there's a different standard. You can go public earlier, but I'm very bullish on things happening. Silicon Valley is so heated up now. Some of the hot companies get funded at such a high valuation that it's really hard. It's hard as a venture capitalist to make money, and that's what drives a lot of us outside of Silicon Valley to find people who are willing to make a great company on a smaller amount of capital, and that's another characteristic. Most of the great companies were started on a very small amount of capital. They got to profitability on a very small amount of money. And it always worries me when there's a company funded this week with $40 million. It was a little iPhone application company with $40 million. Started, I think it's too much money.
Great. Don Butler, let me ask you, as Don Wood just mentioned, Japan and some of the cultural issues that arise there and some of the other countries that I know you've invested into. If you could sort of talk a little bit about that, and again, sort of contrast with what you see here in the United States when you're looking.
What's funny is if you took as an investing philosophy to follow exceptional individuals, the one thing that does make me very afraid for our ecosystem here in the U.S. and in Silicon Valley is we've seen more and more of those individuals in a reverse brain drain go back home. As people would come to universities and found companies and hopefully stay here, and we've seen. I can't tell you how many people I know either that we've backed or that have been among friends working at Cisco or other companies who've gone back because the Chinese government is going to give you $1 million to start your company if you come back to the Suzhou Science Park. And so what you really see is you do see a very strong reverse brain drain, and it strikes me that it's in the stuff that's hard to understand. Social media I like. It's relatively easy to kind of get. If you're talking about optics or if you're talking about sort of, different layers in your semiconductor memory, that there's far fewer people who understand that. So that's where we see, you know, China, I would argue, is probably an easier place to start your company today if you're in those industries than in the U.S. The other thing, alluding to what you're saying, we worked with Japanese venture funds both as co-investors, and I've spent a number of years there. And you know, one of the most poignant moments for me was one of my friends had a company that actually was getting ready to list on the NASDAQ back during the internet bubble, and the bubble basically took that company out. And he's been basically branded as, you know, if you're Japanese, he's kind of, you know, sorry, you kind of blew it. And so his career as an entrepreneur was pretty much ended with that. And here, you know, we like to, people who have had a failure in their career usually have seen the winds blow both for good and for bad, and are better at reading negative signals, reading when the market has changed and it's blowing in their face. That's a cultural difference that I see in the U.S. and in China that I don't see in places like Japan.
Great, thanks. Nicholas, let me ask you, sort of following up on your comments, and at the very beginning I asked for a show of hands of those here who are thinking about going back to, or leaving the U.S. to start a company. Sort of picking up on what you were saying, would you suggest that they do that? Would you suggest they stay here? Does it make a difference?
I don't think there's one answer to that. I think it really depends on the business, as Richard said. The ecosystem point is very important, right? The young entrepreneurs typically succeed because they are visionary and ambitious and have no fear, but also because they have an ecosystem that helps them succeed and fills the gaps and educates them and brings the expertise they don't have, et cetera, et cetera. So what I have found is that there's a dual problem in focusing on Europe for a second. There's a dual problem. There's the ecosystem itself is weak. There's not enough venture capitalists that have done it before, et cetera, et cetera. But there's also a very, and that's where you guys can all play a role if you go home, it's very little understanding and willingness to buy into the venture capital model and ecosystem by the entrepreneurs. So give you a typical example. I often speak to European entrepreneurs, and I was recently speaking to a group of about 30 of them. And I explained to them what the venture capital model was, and I said, look, I took an example of, you gentlemen, two of you starting a company, you each own 50% of the shares, and you come and talk to two of us about funding, and let's say we agree we're going to each one about 20+%, let's say 20% of the company. We're going to say there's about 20% that we need to reserve for future employees, which leaves you with 20% each down from 50. And by the way, we're going to tell you maybe you keep 25% of that, and the rest you're going to vest over 4 years, and hopefully you'll still be employed. That's the venture capital model. Now, when you tell that story to European entrepreneurs, they look at you like, are you kidding me? And they don't get it because they haven't seen enough people around them succeed with that model, right? And they don't necessarily understand that this is a model that optimizes growth. This is not a model where the venture capitalists are trying to take over. This is a model where the venture capitalists are trying to help the entrepreneurs succeed. But it has its rules, and you need to really buy into that model, into that growth model for it to work. So please bring that understanding, not just the example I quoted, but the general understanding back to Europe and adapt it, and then you'll succeed. Great,
thank you. I'm going to change a little bit from what we've been talking about to a slightly different topic. Going to, and I'll, for lack of anything else to use as a reference point, the pyramid that Don had put up, which I had not seen before, but I actually find very sort of an attractive way to think about this. Are there, thinking about the different types of, the 4 different pieces that you have that were on that pyramid, and thinking about the various different types of geographic markets that each of the 4 of you are looking at, are there different sorts of technologies, sectors, and the like that you find attractive as you're thinking about where you're investing overseas versus here in the United States that work better and sort of move higher up the pyramid than you might see in terms of thinking of other types of technologies? Richard?
Yeah, I guess, to the point of Don's chart, which I think is a very good encapsulation of how technologies evolve or how companies can evolve. We did recently guess last year invested in a Turkish internet company, which is kind of a Yelp meets Groupon for Turkey only. And that's a perfect example of something that would be kind of in the middle of his pyramid there. But I think also, you know, you can find certain concentrations of skills and expertise in certain places, which is not always Silicon Valley. Sometimes we do certainly have plenty of world-leading technology here. But we also last year did a wastewater treatment deal out of Israel. And it turns out that Israel has spent a great deal of time, in fact, all of the time since the modern state came back into being, worrying about water use and water conservation, including, you know, treating wastewater properly so you don't destroy the environment, so you can reuse it, etc. So there's a tremendous base of expertise there, which is probably not equaled by anywhere else on the planet, even though there are other centers of excellence in that area. So it's partly the pyramid and the maturity of the local market in the case of the Turkey deal, but also going to the centers of excellence and recognizing where those are.
Great. Nicholas?
We tend to see, so I'm oversimplifying, tend to see more core technology innovation in the US than in Europe, and part of the reason is not that the innovation doesn't happen there, but as you know, when it happens there, it tends to be transplanted as a business in the US sooner rather than later. Interestingly enough, I mean, Europe is clearly on the top of the pyramid. I mean, the pyramid applies more to developing countries, as Don said. But an interesting angle that I see is a hybrid model, so innovative e-commerce model that draw on the cheap labor in China, for example, and we got a couple of investments in that area in Europe actually, where e-commerce sites where you can buy a custom sweater or purse or shoes, and that's actually being quickly manufactured in China and delivered to you in a very efficient supply chain, leveraging the innovative e-commerce techniques and low-end cheap labor.
Yeah, I agree. You know, in addition to technology innovation, there's also business model innovation, and that's easy to do. You can do that anywhere. And the example you just mentioned, we've funded or we're in the process of funding a company in China that it's like the Zara of China. I don't know if anybody knows Zara. Probably more women in the crowd here, maybe some guy. I didn't know it either until I learned about this deal. But the trick is Zara is beating the Gap because they can get products on their shelf in like 3 months. Their life cycle, their turnover of fashion items, and the Gap is more like 9 months or a year or something. There's a company in China that has gotten it down to 5 or 6 weeks. And they happen to manufacture all the products for the Western world, within probably 150 miles of this company's location. So they can see what's being manufactured in these factories, and they can basically copy what's selling and then have it on their shelves instantly. And then they can make a few products, and their shelves are online shelves in this case. It's all e-commerce. They can put it in their store and then see what's selling, make a few items, and then if it really is selling, they can stock up and have huge quantities of it within 3 or 4 weeks. And if it's not selling, they didn't hurt themselves because they didn't make very many. So it's a business model innovation that's working really well in China. Another business model innovation was virtual goods. That was something that was invented in Japan. That's the way a lot of game companies are making their revenue now, by selling swords and weapons and all the virtual goods. It's a powerful model, and that wasn't invented here. So, and in India, there's outsourced medical services. You can get there's a hospital that does heart transplants, like making them like a production line, and they have a much higher success rate, and they do it at 1/3 the cost. And that's because they've taken a different approach to building a hospital that does just one thing and does it really well.
And Don?